Done poorly, it could cost you thousands. Done right, real estate investing can be one of the most profitable and rewarding experiences out there. Hey guys, it's David. I'm one of the realtors here at the RM Real Estate team here in Abbotsford. Hey, listen, we're talking about real estate investments today, and real estate investing can be one of the most profitable ways to round out your portfolio. It's something that I'm involved in personally. It's something that the guys I work with are avidly involved in as well, and it's something that we would really encourage you to do if you've never done it before. So when you're getting ready to consider pulling the trigger on your first investment property, we want you to avoid some really costly mistakes. And so today we're going to talk about 7 common mistakes that we want to avoid with real estate investments. Number 1, poor market research. So it's very important that we do a lot of really good research before we buy you your first investment property. We can't just buy anything. We can't overpay. We want to look at things like cap rates, which is the net operating income divided by the purchase price. We want to look at the location, because that's one of the most important aspects of any property that you're going to own. And we want to look at the multi-ways in which this property could pay you. It's not just in appreciation, it's also on the mortgage paydown, your equity. It's also potentially going to cash flow depending on what interest rates are doing. And there are a number of other facets that we want to explore as well. But one of the first mistakes we want to consider is that we want to make sure we are not avoiding really important research. Okay, so I know some of this can be very, very overwhelming, so just make sure that wherever you are, you talk to a really good realtor who can walk you through all these steps and make some really good informed decisions with excellent research. If you're in the Fraser Valley, be sure to give me a call or my team. We give free consultations and free home evaluations, all that kind of stuff, so give us a call and we'll make sure to help you out. This is so hot. Okay, number 2, underestimating closing costs, renovations, all that kind of thing. So we want to really do the math with you and do it very carefully. There's a whole bunch of things to consider when you're making your first real estate investment. There are also a whole bunch of tax implications. So in BC here, we've got the BC flipping tax. There's also a federal flipping tax. There's capital gains taxes. There's foreign buyers bans. There's all that kind of thing. The tax stuff, we're definitely going to refer you to an accountant to confirm all that. But we want to tell you what the government has at least told us, direct you to the websites in which the information can be found, and then use those guides to make some informed decisions on what we're actually going to do here. There are a lot of costs. Don't let it overwhelm you too much. This is something that's absolutely going to be worth it for you if you do it properly. There's a real need for housing, especially down here, and there's a real need for ethical and fantastic landlords to work with. And so maybe the next one's going to be you. Okay, mistake number 3, only counting on the appreciation. Depending where you live in Canada, that might be very discouraging or intimidating, because not all markets are like our market here in Vancouver in the Fraser Valley, or Toronto, where it's also fairly strong. But there are actually a lot of ways that real estate can pay you when you're an investor. So number 1 is cash flow. So when interest rates are favorable for you, the investor, you can actually get money above and beyond your costs per month. So that can go into your pocket. Number 2 is the mortgage paydown. It's the equity that you gain on your home as the mortgage goes down over years. So that's also going to pay you when you sell. Number 3 is the appreciation. But there's other ways that you can garner income on a property as well, depending what it is. If you've got a larger property or you're investing in a piece of land, some people will park stuff like RVs or trucks or boats or that kind of thing. So there are a lot of creative ways, a big plethora of ways for you to garner some income when you're an investor. We just want to make sure that we can weather the storm no matter what happens in the future, and that's what leads me to our next mistake. Okay, mistake number 4, not having an exit strategy or a contingency plan. So if you're doing this on your own, how long are you planning on holding this? Is it 3 years, 5 years, 10 years? If you're with a partner, the same conversation. We always say in real estate that it's not so much about timing the market so much as it is time in the market. So longer is generally going to be a whole lot better for you, less risky. Short real estate holdings can be a little bit riskier. There can be vacancies throughout the time that you are holding this piece of real estate. There can be special levies if it's a condo. But do you have some backup plans? We always want to have like a plan B, C, D, E, F. Okay, so like the last thing we want to see if you buy, say, a pre-sale condo is not being able to actually complete on it. So do you have people in your life that could co-sign with you? Do you have other savings that you can draw from for the down payment if interest rates get high? And there are a whole plethora of issues there that we want to talk about, but we want to have an exit strategy. We want to have backup plans, B, C, D, E, F, G, all the way, so that no matter what happens, government, policy change, personal needs, interest rates, you're going to be fine. Okay, so mistake number 5, over-leveraging and taking on too much debt. Okay, so debt in real estate, we would say, is one of the better kinds of debt, mortgage debt, because it's toward a real investment, real asset. It's a lot better than, say, car loans or a lot of bank loans, or for sure like credit card debt. But it is debt, and we don't want you to over leverage. So we want to make sure that no matter what happens, because we can't predict the future, you're going to be okay. One of the most fluid things that we need to consider is interest rates. They are interest rates. Interest rates go up and down and all around. In the last 30 years in Canada, whenever we've had an interest rate hike, we've actually been 50 to 60% of that height within 2 years. That's been a really helpful gauge for folks recently, since we were down at 1% and then all of a sudden way back up at 6 and 7. But now, after 2 years after that height, or coming into 2 years after that height, we're headed to that very trajectory of about 50 to 60% under. But if you're over leveraged and you're on a variable, or even when it comes time to renew, you may have to sell, you may be forced to sell at a time that's not very good for you. So we don't want to ever get into that situation. We want to be able to have good contingency plans, and we don't want to over leverage. Your job as well, are you going to be making the same money that you're going to be making in 5 years? Is there potential for you to have lost that job? What does that look like? Okay, mistake number 6, choosing the wrong tenants or having poor property management. I'm pretty passionate about this one because I've had actually a whole pile of really, really good tenants and 1 or 2 horror stories which were actually mitigated because of some backup plans that I had as well. But in any case, you want to really make sure that you've got good tenants because you want your place looked after. You also want to get paid for the mortgage costs and the strata costs or whatever other costs that you are incurring. You want to make sure that you're able to pay for all those. So how to get good tenants? Well, how I personally do it, I make the application process a little more thorough and a little more intensive. When you put out a place on, say, Facebook Marketplace, you're going to get a pile of, you guessed it, is this available? Is this available? Is this available? What I always say is, yeah, it's available. We're actually taking applications up to this day. If you'd like me to send you one, send me your email address. Most people won't even respond. Those who do respond might send you their email address. If you send the application over, which by the way isn't just like a 1 or 2 or 3 line question, it's about 2 or 3 significant pages. Those that actually send it back to you, those are your serious contenders, and those are the ones that you want to consider. Not all these non-responders. If they can't even respond to a Facebook message or an email, how good do you think they're going to be at actually paying you rent? So that's one way to find really good tenants. If you don't have time to manage this thing on your own, there are a pile of really good property management companies. Home Life, who we work for, actually has a division just like it, who are fantastic. So if you go that route, you're going to pay a bit of a fee, but then they're going to take care of all this for you. Another way to make sure that you get some really good renters, not tenters, we don't want that, renters, is that we want to make sure that we are asking for the appropriate amount of rent. You don't want to go too low because that's going to bring in a category of renter that you probably don't want for the product that you're offering. You also don't want to go too high though either, because that's going to limit, you don't want to get asked for like the record amount of rent for that kind of product, because that might limit the amount of interest. What I always do is I try to be right in that range that's appropriate. And if you find a really good person, you can choose if you're not going to raise it. And the ones that I haven't raised are the ones that I've given a little concession on after I've done my deep dive of vetting. Those are often actually the best and most loyal and fantastic renters and tenants. Mistake number 7, failing to account for unexpected costs. So there's going to be unexpected costs. It's part of what we're going to talk you through with the contingency plan B, C, D, E, E, F. We talked earlier a little bit about renovation costs and all the tax implications, which you're going to confirm with your accountant. But there are other costs that we want to be ready for as well. And these are things like, unexpected vacancy. Maybe if you have a water problem in your building and there's going to be some deductibles on your insurance. When you move into a place, the strata is often going to charge you, move in, move out fee. When I bought my mom a place, the realtor I was working with failed to tell me that this is actually one of the very few municipalities in the province that doesn't use the provincial electricity company, which meant that the city was managing it, but she was moving in on Thanksgiving, and so I had to pay a premium for a private official in the city to come out on the Thanksgiving weekend to set up her power, so she wasn't cold and in the dark when she moved in. So there's a lot of unexpected costs that can come your way. We're going to tell you about the ones that we know of in your area because we're going to be experts in our area. We're also going to tell you about all the ones we're able to research and find out through the vetting process. In any case, there's a whole lot of unexpected costs that we want to be ready for. So we're going to make sure that you're prepared with some contingency plans if something comes about that was unforeseen. Okay, so that's it. So real estate investing can actually generate fantastic wealth for you and your family. It's a great way to be profitable and round out your portfolio, but only if you do it right. And if you don't do it right, it can actually cost you a bundle. So make sure that you do your research. You talk to a really good realtor in your area. Talk to us if you're in our area. And if you got any questions, be sure to leave a comment, ring the bell, like us, do all those things. Follow the RM Real Estate team for more real estate advice.